Hello everyone, welcome back to my channel AASTHA SHARMAA. Today's video is about the Canadian tax system and how to file taxes in Canada. Ever wondered how it works and how to file taxes in this system? Let's embark on a journey to understand it. To begin with, the purpose of taxation is to fund public goods and services, things like roads, schools, and healthcare. It's also a tool used to implement fiscal policies and redistribute wealth to reduce economic disparity. In Canada, there are three of taxation: federal, provincial, and municipal. Each has its own jurisdiction and responsibilities. The federal government collects taxes to fund national and international programs. Provincial governments manage regional matters like education and healthcare, while municipal are used for local services like waste management and public transportation. When it comes to filing taxes in Canada, you need to gather necessary documents including your T4S or T5S, receipts for eligible expenses, and records of any income earned. The Canada Revenue Agency, or CRA, is the federal body responsible for administering tax laws, ensuring compliance, and collecting taxes. Not only are they a crucial player in the tax system, the CRA plays an instrumental role in maintaining the fiscal health of the nation. Once you've gathered all the necessary documents, you have a few options for filing your taxes. You can use a tax preparation software, hire a preparer, or do it yourself with paper forms. If you choose to fill out the forms yourself, make sure to use the appropriate ones as required by CRA. Now, let's dive deeper into the Canadian tax system and the process of filing taxes. Stay tuned for more. At the highest level, we have the federal taxes. These are the taxes that every Canadian, no matter where you live, is required to pay. Let's delve into the types of federal taxes and understand how they contribute to Canada's overall revenue. First and foremost, we have income tax. This is the tax that you pay on the money you earn, whether that's from a job, a business, or investments. The more money you make, the more tax you pay. It's a progressive system designed to ensure that those with higher incomes contribute more to the public coffers. Next, we have the Goods and Services Tax, or GST. This is a value-added tax levied on most goods and services sold for domestic consumption. Whether you're buying a new pair of shoes or dining out at your favorite restaurant, the GST is typically included in the price you pay. This tax is crucial, as it provides a steady stream of revenue that doesn't depend on citizens' income levels or corporate profits. Speaking of corporate profits, let's talk about corporate taxes. These are the taxes that companies pay on their profits. Just like with income tax, the more a company earns, the more it pays in taxes. This tax is essential as it ensures that businesses contribute their fair share to the country's finances. Together, these taxes form the backbone of Canada's federal tax system. They fund everything from healthcare and education to infrastructure and social services. These taxes are vital in keeping the country running smoothly and ensuring that all Canadians have access to the services they need. Remember, while taxes may seem like a burden, they're a critical part of maintaining the quality of life we enjoy in Canada. They fund the public services we rely on daily and help ensure a fair and equitable society. Next, we'll explore the provincial taxes. Now, let's move on to the provincial taxes. As we journey through the Canadian tax system, we find ourselves at the provincial level. Here, you'll encounter several types of taxes with rates that vary across the different provinces. It's a colorful landscape, as diverse as Canada itself. First up, meet the provincial sales tax, or PST for short. This is a tax applied to goods and services purchased within a province. It's like a tag-along friend who adds a bit to your bill at the checkout counter. While some provinces have harmonized their PST with the Federal Goods and Services Tax, GST, to form a harmonized sales tax, HST, others maintain separate PST and GST systems. Next on our journey, we come across the gasoline tax. If you own a vehicle, you're likely familiar with this one. This tax is included in the price you pay at the pump. It's like a toll for the roads you travel, contributing to their maintenance and improvement. Again, the rate of this tax varies from one province to another. And finally, we have the tobacco tax. This is a provincial tax levied on tobacco products, designed to discourage smoking and promote public health. Like our previous stops, the tobacco tax rate is not a one-size-fits-all, and it varies across provinces. It's important to note here that these taxes are not just arbitrary charges. They play a crucial role in supporting provincial services and infrastructure. From healthcare and education to roads and public safety, these taxes fund the services that make life in Canada what it is. So as you navigate your financial journey in Canada, keep in mind these provincial taxes. They may seem like just another line on a receipt or another deduction from your earnings, but they are essential cogs in the wheel of Canadian society. Lastly, we'll cover the municipal taxes. Finally, we have the municipal taxes. As we continue our journey through the Canadian tax system, we now find ourselves at the level that's closest to home, your local municipality. This is where the rubber meets the road, literally and figuratively. Municipal taxes mainly fund local services. Think about the services you use every day. Turning on the tap and getting a glass of water, for instance. That's your local water treatment plant at work, funded by municipal taxes. Or how about when you take out the trash? That's waste management, another service funded by these taxes. And let's not forget about the local infrastructure. The roads you drive on, the parks where your kids play, the public libraries where you borrow books, the local community centers where you attend events. All of these are maintained and improved using funds from municipal taxes. Now you might wonder, where does this municipal tax revenue come from? The answer is primarily from property taxes. If you own property in a municipality, you pay a tax on that property, which becomes a significant part of the municipal budget. This tax is based on the assessed value of your property. The more valuable your property, the higher your property tax. But property taxes aren't just for homeowners. If you're a renter, part of your rent likely goes towards your landlord's property tax. So in a way, everyone contributes to the municipal tax revenue, directly or indirectly. It's important to note that municipal taxes can vary widely from one municipality to another. Different municipalities have different needs, and thus, different tax rates. So, the amount you pay in one city or town may not be the same as what someone pays in another. To sum it up, municipal taxes play a crucial role in maintaining the quality of life we enjoy in our local communities. They fund the services we often take for granted, but would surely miss if they were gone. Now that we've covered the 3 levels of taxation, let's talk about tax returns. You might be wondering, what's the deal with tax returns? Well, let's dive right into it. Filing tax returns in Canada, much like in other countries, is an annual ritual that every resident must partake in. It's a way of reporting your annual income to the Canadian Revenue Agency, or CRA, so that the appropriate amount of tax can be calculated. But it's not just about paying up. Filing your tax return also allows you to claim any deductions, credits, or refunds you may be entitled to. Now you might be asking, who needs to file a tax return? Well, the answer is pretty simple. If you've earned income in Canada during the year, you are required to file a tax return. This includes full-time employees, part-time workers, self-employed individuals, and even students with part-time jobs. The deadline for most Canadians to file their tax return is typically April 30th of the following year. For instance, for the tax year 2023, the deadline would be April 30th, 2024. It's also worth noting that if you're self-employed or have a spouse or common-law partner who is, you have until June 15th to file. However, if you owe taxes, you still need to pay by April 30th to avoid interest charges. So why is it so important to file your tax return on time? Well, aside from the legal obligation, timely filing can prevent a host of complications. If you owe taxes and fail to file your return by the deadline, you'll be hit with a late filing penalty. This starts at 5% of your balance owing, plus 1% for each full month your return is late, up to a maximum of 12 months. And trust me, these penalties can add up quickly. Filing your tax return promptly also ensures that you receive any benefits or credits you're eligible for without delay. This could include the Canada Child Benefit, the GST/HST credit, or the Guaranteed Income Supplement, among others. And let's not forget about tax refunds. If you've paid too much tax during the year, you won't get a refund until you file your tax return. So if you're expecting money back, it's in your best interest to file as soon as possible. And there you have it, a simple guide to understanding the Canadian tax system. Remember, taxes are essential for funding public services and infrastructure that we all rely on, so pay your taxes on time and contribute to the betterment of your community. If you like this video, share, like, comment, and not forget to subscribe. Now that we've covered the basics, let's talk about how to file taxes in Canada. First things first, you'll need to gather all necessary documents. This includes your T4 slips from your employer, receipts for eligible expenses, and any other relevant financial records. Once you have everything you need, you can decide how you want to file your taxes. You have several options here. You can file online using a CRA certified tax preparation software, by mail, or you can choose to hire a tax professional to do it for you. Filing online is generally the fastest and easiest method, but all methods are equally valid. Next, you'll need to fill out the appropriate tax forms. The forms you'll need will depend on your residency status and sources of income, so make sure to do your research or consult a professional if you're unsure. Once you've filled out your forms, it's time to submit your tax return to the CRA. The deadline to do this is typically April 30th, so make sure you don't miss it. After you've submitted your tax return, all you have to do is wait for your notice of assessment. This notice will confirm that the CRA has received and processed your tax return. It will also tell you if you owe more tax, are due a refund, or if your balance is zero. Filing taxes may seem daunting, but with the right preparation and understanding, it can be a straightforward process. And remember, if you're ever in doubt, don't hesitate to seek professional advice. As we've discussed, paying your taxes on time is not only a legal obligation, but it also contributes to the betterment of your community by funding essential public services and infrastructure. If you like this video, share, like, comment, and not forget to subscribe.